All right. Thanks, Daryl. Let's do a quick sound and video check. Make sure we're good to go. What's up, Miss Renda? Miss Lorna? All right. All right. Looks like we are good to go. Woo woo. All right. Got some music playing in the office. Got a hot coffee here. Typically, I'm not a fan of caffeine consumption. It's 8 p.m. on the East Coast here, but I do wake up a little bit early, so I want to make sure I'm fresh and ready to go for you guys. But listen, y'all, we'll jump in here. As always, I'll try to keep it under an hour. I want to go through a few slides. I want to show you a few different things. But as always, with every webinar, I try to jump into a few charts at the end and try to give you a few actionable ideas to take home. So stick around to the end. We'll be sure to jump into a few charts. And as always, guys, I appreciate you being here. Now, obviously, a crazy week in the market, and it's only Wednesday. And I'd say the markets have been pretty interesting, to say the least. And I think for a lot of traders, really challenging. Now, as we head into the end of the month, April has actually been a really good month on my end. So I want to show you all a little bit of what's been working tonight, the recent changes in the market, and then I think some of the changes that you want to be open-minded to making in your own trading. That way you can stay profitable in this craziness. But for April, and mind you, have a few trades open, so this could change a little bit. But so far this month, I've closed 29 trades, which is a lot for me. So we'll talk about frequency here. But 29 closed trades, with 21 of those being winners. So that's a 70% win rate in a pretty volatile market. And this was a combination of longs and shorts. And none of these were day trades. They were all swing trades. So just about 30 trades in a month, for me at least, is a pretty high frequency of opportunity, which I think, guys, in this market is really going to be important. And we'll talk about that. So here's the winning trades and the losing trades and the percentage gain or loss on each. And obviously a lot more winners than losers. But these winners, they've all been, solid base hits here. And aside from gold and Oxy, which gapped down pretty hard against us, we've kept the losses tight for the most part. And a big gap down against you is always a good reminder to never risk more than you're truly willing to lose. But if you can maintain a 70-75% win rate, and then keep the risk reward in line, you're going to be in pretty good shape as a trader. And while April's been solid, I've seen these same results over my last 60 trades, focusing on some specific setups. So coming in at just about a 70-75% win rate. So as of late, I've had a much higher frequency of trades, which I think in this market is big. So there's Kobe just splashing one in LeBron's grill. But what I think is great about a higher frequency of trades, it makes each trade less of a, do or die situation. Each trade isn't the end all be all. It's just, it's one of many, because usually there's another few trades lining up right around the corner. But in terms of, controlling the emotions, I found this is super helpful, because at times I put myself in a situation where an open trade was a big deal. Then you're walking around kind of wearing the current results of that trade on your chest, right? And then another thing is, for what it's worth, I've never traded or really looked at stocks like Raytheon before. Think like a lot of us, I cut my teeth on the FANG stocks, big tech stocks, and big semi stocks. And to be frank, this year's been the first time I've traded a lot of the stocks we've been focusing on. And I think that's a good thing. But a recent example here with the Raytheon trade, this is a great solid base hit. And for me, this is the textbook trade to the upside. It's in an uptrend. There's positively stacked DMAs. There's buy signals, which we'll talk a little bit about tonight. But super clean setup, nice stress-free trade, a nice 40% return over the course of a few days. So we're looking for things like that to the upside, but the short side has really been great in this market. And at the moment, guys, it's looking like the short side is going to be the biggest plate of opportunity. But here's a short that we closed last week on DoorDash for a 45% return. So the nice thing about a lot of these trades is that they're all pretty short-lived. So for me, DoorDash, not typically a stock I would focus on, but this is a setup we should all be focusing on. Nice and easy, picture-perfect short. And I got a few more examples, or a lot of examples, of recent trades to share with you tonight. More importantly, I want to show y'all a few of our current positions, because I do think on a handful of them, you could still take some action. And like I mentioned, we'll dive into some live charts here after. But before we dive in, as far as the agenda for tonight, we got to talk about the current market conditions, because things have certainly changed since your 2020, 2021 market. Show you guys what's been working and what hasn't been working. And then I'm really pumped to show you how these buy signals and these sell signals and the watch list have really come through clutch in this market. And then at the end, I want to make sure y'all are going home tonight, if anything, with a better sense of how you can make some progress and some profits in this market. But we'll do a quick intro here before we jump in, just in case this is your first time hearing me on the mic. But my name is Taylor Horton. I'm the Vice President of Directional Options Strategies here at Simpler. And I've been trading for just about, it's going on year 10. And there's nothing else I'd rather do for a living. And I really feel like trading is my calling. And probably like a lot of you, I feel like I'm mentally and emotionally wired to be a trader. My dad's a trader. He's made a living in the market. I had some great mentors when I started out as a teenager. 10 years in, it's been a heck of a journey. And I'm really fortunate to be able to share that journey with folks like you and folks in the Simpler rooms. And when I think about it, really, so much of the last 10 years has been about the pursuit of trying to master one setup. So here's a quote from Mark Minervini, which I really like. I heard him say this recently in a video interview: specialists get paid. And I love that quote because I'm a firm believer, as a trader, you want to carve out your niche. You want to try to become great at one thing versus becoming, decent in many things. That's my mentality. But in terms of the overall market here, at the moment, and keep in mind, things can change fast. As we just saw, right? We rolled over, we got an epic short squeeze, and then we rolled over again. So with things, liable to change fast, can't have any biases. But at the moment, your S&P 500, your QQQ, many of the sectors, they're lacking any kind of bullish trend, structure, or momentum properties. I kind of refer to that as the big three. And a lot of the lack of bullish trend or structure is in the same spots you had leadership over the last handful of years. So in terms of some of the problems here, and again, keep in mind, this is just my perspective on things, but these are the things that I found matter most over the last, going on 10 years. So looking at the S&P 500 here, there's negatively stacked EMAs, there's bearish momentum on the weekly chart, and I got sell signals. And if you're unfamiliar with the stacked EMAs, or any of this, to put it in plain English, the S&P 500 is on my bearish watch list right now. So with that being said, in terms of a swing trade, I think you want to be a little bit cautious here about it getting, aggressively long. We're working the game plan of shorting the bounces in the S&Ps. But here's a closer look at Mama Market. And don't get me wrong, like that felt like the mother of all short squeezes. So really impressive rip off the bottom. But then we kind of pull back a little bit. And when it comes to getting long or buying the dip, I think the real question we should constantly ask ourselves is, are we buying this dip into, like the best trend, like the strongest structure and the best momentum possible? From my perspective, even after the short squeeze, we never had that lining up here in the S&Ps. So had you bought that dip after that short squeeze, you're kind of in some trouble here as it breaks down quickly. And the same thing can be said for my beloved QQQ, negatively stacked EMAs and sell signals. So, look at it this way. In terms of the edge that we're looking for when we're swing trading, all of that is missing here right now with the QQQ in terms of wanting to trade it to the upside. But if you're not paying attention to the right things, it's easy to get sucked into a chart that looks like it might have put in a bottom, might appear to be bullish, and it's easy enough to get bamboozled. So being that we have the overall bearish structure here, the only game plan I'm trying to work on the Qs right now is short the bounces. You look at XLK, which is big tech, same thing. I got sell signals. It's on the bearish watch list. For us, there's only one game plan to work. Same thing here for the semiconductors. That's bearish trend, bearish structure, bearish momentum. Whole lot of nastiness there. But I do think it makes for a good short on the next rip. And same scoop here, guys, for the frisky financials. XLF has got negatively stacked DMAs, sell signals. So give me a bounce, and we're going to look to short it. Yeah. So in the overall structure, pretty much all over the place, is bearish. Typically, what that means, guys, is we're likely to see a lot less bullish opportunities. Like the ones that we've seen recently in the energy sector. We had a handful of trades in energy, but one trade example here, we got long the XLE in early April, and we're taking profits about a week later for 40% return there. So I love those kinds of trades to the upside, but our job is to make sure we fully maximize those kinds of trends and setups when they're available, and then quickly move on when it breaks down. So even though energy is starting to break some structure, that group and the stocks in it have given us a handful of profitable trades over the last 2 months. And I say this to say, I don't think I traded energy once last year, but it's been a great plate of opportunity. But now this is what's more likely to work, in this market. I think this, for now, is going to be the best trade in this environment. Shorting the bounces in stocks that have, the sell signals and the bearish structure. So right now, my watch list is chock full of shortable setups like this. And I do want to show you a few later. But we just closed a short on Nike on Monday, locking in a quick 30% return on our risk on the credit spread. I love the frequency. I love how frequently they're being presented as far as an entry, but then we're getting them move into our target really quick. So I love that a lot of these trades are pretty short-lived. Just makes for really good capital turnover. And here's another short that I actually closed this morning for a nice 30% gain on Carnival Corp, which I assume is the cruise lines. But there's my thing. I used to have those biases. So a perfect short in CCL, in years past, it would come through my scans like day after day after day. I wouldn't even look at it because it's not, big sexy Tesla or Nvidia or Amazon. It's not one of the stocks I quote unquote grew up trading. This is a good short, right? So if it's Apple, if it's CCL, I'm kind of indifferent. If it's got a shortable structure, it's kind of fair game. So I never traded this before, but it was on my bearish watch list coming into the week. Get the sell signals, took an entry near the 21 EMA. In another example here, where you're shorting on Monday, you're catching a full flush into 2 ATR. In a lot of markets, that flush might take a week to 2 weeks. So that's what's great about this market. A lot of opportunity, but we're able to rinse and repeat this. So the thing is, right, the real key is just making sure you have a watch list, bullish and bearish. You want to have both sides covered, of really clean setups. It's one of those things where if you know how to fish, right? So if you know how to utilize a good strategy, and I can teach you how to fish, but more importantly, then if you know where to fish, everything else kind of takes care of itself. So really pumped about how these signals have been working here. But in terms of the problems with the market as it currently sits, there's a handful. One being, which is, this comes back a little bit to mentality, but last year's leaders are no longer in uptrends. So what I've experienced and what I've noticed is traders can be a little bit resistant to looking at new places for opportunity. So this just makes things a lot more difficult than it has to be, because what was working in big tech stocks for, almost 2 years straight, it's not working anymore. So it's one of those things where it's like, okay, is the problem that, these squeezes, these setups, these strategies, that were once thriving, is the problem that they're no longer working, or potentially is the problem that traders are just looking in the wrong places, and oftentimes the wrong direction? I'm a firm believer it's the latter. And then one of the biggest points I'm trying to, really pound the table on tonight, because if you watch, CNBC, or you jump on Twitter, the entire narrative is negative. And I get that from some perspectives. This is a trader's market, right? And even as a swing trader, 30 trades in the month of April, like big time frequency. So one of the biggest points I'm trying to make tonight, regardless of any narrative, there are still plenty of great looking setups to nail in the market. And the good news is, I think for a lot of you, you know, these are setups, guys, that you're used to trading, right? And I'm looking at a few names in the chat here. I know a lot of you personally. I know you from the options room. I see Gil, you're in here. Gil, I know you from Focus Trades. Y'all, a lot of y'all have got experience trading these kinds of setups. They're just in different spots right now. So you have to know where to find them. And I can show you how and do a lot of that work for you. But the cool thing is I get to work closely with traders in, the options room, the mastery, the training room. What's been awesome as of late is, my entire focus is just, taking them through all the setups on the focus list and then watching them kind of take action on their own. Not waiting for a trade alert, but they're taking the watch list. They find a good looking short, they find a good looking long, and they're taking action, which to me that's the end goal, really. But that's a huge piece of the puzzle. Can't rely on the big fangs, can't rely on the big semis here. You got to keep a top-notch watch list at all times, and that's where I can help you all out. Right, but this is huge, and I think for me, this is probably not probably. This is definitely the best thing I've done for my trading recently. And if I had to narrow it down, I really think it's a big part of the reason that I've been having some of the better trading of my career as of late. This year we really need to expand our horizons in order to find these actionable ideas to the upside and the downside. So, like I mentioned, there's still great opportunities in this market if you know where to look and if you have the the open-mindedness to kind of look off of that beaten path. But a big part of knowing where to look is just that mentality of, all right, I'm going to fall in love with a setup over a stock. Can't fall in love with a stock. And like I mentioned, I've never traded. And it's kind of funny, or you think after trading for 10 years, like you've seen them all. But I've never traded or even seen half of the stocks we've been trading lately. But we're trading them, we're following them because that's where the good structure is. So we're following, basically following the big money. And it's important to do that as a retail trader. And the big goal of mine right now is, cranking out a much higher frequency of trades, based on these signals. And I'll touch on that in a little bit more here. But all I'm looking to do in this market, stacking up base hits, I'm just looking to rinse and repeat trades, on these solid setups as much as possible. That's what's working in this market. Okay, so that being said, the reality is you can't do that if you're stuck on trading just a handful of names, right? Not from a swing trade perspective. So the key really is to be completely dialed in on where the bullish structure is going, right? Where is the bearish structure going? Supply and demand, accumulation, distribution. So for 4, 5, 6, 7, 8 weeks on end, energy might be the play to the upside, and for a while it was. Then that might break down and kind of puke it up. So then it might be the consumer staple sector, that we're focusing on to the upside. But if you have the proper rules, if you have the proper strategy, and then most importantly, if you know where to deploy that strategy, you're going to be in good shape in this market. I think a market you can thrive in. So in terms of what's been working over the last few months, I think a lot of opportunity here if you're taking a disciplined and open-minded approach to your prep and to your watch list building. To an extent, guys, I think we want to be willing to trade just about anything if it fits the right criteria. Right? Now we're looking for good liquidity, like we're looking for tight spreads. So a little bit tongue-in-cheek when I say we'll trade anything, but I'm kind of at a point where I'll trade anything. If it's on my bearish watch list, if it's Carnival Cruise Corporation, not too sure what that is, but if it's on the watch list, I'm going to short it. If it's the agriculture sector, which I don't think is all that sexy, but if agriculture's on the bullish watch list, then I'm trading agriculture. Just makes our jobs, super easy. You kind of get into that rhythm where it's like, okay, I'm showing up, I got my watch list, I'm going to take my entries where I'm supposed to, keeping things nice and simple. But really, I mean, one of those things where a great setup, a good strategy, I think, is just kind of, it can quickly become useless if you're not applying that strategy in the right places. So as a trader, you need to learn how to fish, then you need to learn where to fish. There's a screenshot of the watch list in the corner there. And then I'm curious, guys, in the chat, just out of curiosity, how often do you update your watch list? Let me know. But additionally, in terms of like the watch list here, and this is really important to me. So hear me out on this. If I'm going to work with you as a trader, like critical, right? Like super important to me that outside of any trade alerts that I post, you have to learn how to take action and fish for yourself, right? Using these setups and using the strategies taught, but that's so important for your development as a trader. It's good for you as a trader, and it's good for the cohesive unit, the team and the community. So I want to make sure I really stress that. If I'm going to work with you, of course it's my job to to bring you as many good risk versus reward opportunities as possible. But the importance of giving you that watch list is making sure that you're being taught how to fish, and then you're able to know where to fish and go do a little bit of fishing on your own. And you come back to the team and show us your big catch. But in terms of my criteria, the watch list, I keep referring to that. So we'll spend a few minutes here. In 10 years in, I've learned, and a lot of times the hard way, I've learned what works consistently for me. I've learned what doesn't work. And I think like a lot of traders, at some point you stop fighting that temptation to try other strategies and kind of venture away from what's been working. And you just commit to what's proven to work. So, a lot of my trade decisions, entries, exits, what am I going to trade? What can I, what am I going to refuse to trade? A lot of those decisions are just based off of a checklist. Got a bullish checklist, a bearish checklist. I run those through my, the sectors, the indices. But I know that a lot of you, from the options room and YouTube, you have seen, these arrows, these buy and these sell signals on my charts. So I'll touch on that real quick. And here's the thing: earlier this year, we started making some tweaks and adjustments to the watch list and the criteria. And right now, we're in the process of turning the watch lists, basically into active buy and sell signals on the charts. And as you guys can see, the results over the last 2 to 3 months have been rock solid, even in a pretty vicious market. And the reason being, it's kind of simple. Like the signals pretty much just force you to focus on the very best bullish and bearish setups and trends. So from that perspective, it gets a little bit hard to mess up. But here's what I've been doing. And we're kind of rolling these out as actionable alerts, full steam here moving forward. But every night I run my scans, I do my chart work, I do my sector analysis, and then I take the best examples, with either the buy or the sell signals, and then I add them to the watch list. Right? So everything on the watch list, on the bullish watch list has the buy signals. Everything on that bearish watch list has the sell signals, and it's really as simple as that. We take the watch list and we look to get long the bullish setups where we're supposed to get long, and then we're trying to short the stinkers on the bearish watch list where we're supposed to get short. Right, makes my job easy, but a big part of my job is making sure that watch list, is constantly updated every day, because that's that list is our plate of opportunity. That's where we're going to be fishing from, so to say. So here's an example of an Apple move. And I'm showing you Apple here for a reason, but we caught this move on Apple. And these are the kinds of moves I'm looking to catch as frequently as possible. And this was from last year, and Apple was in play last year, right? Big tech was in play last year. And if you throw the new, the buy signals on the chart, you can see how it all lines up perfectly. So that was a really nice trade, but here's the thing. I don't care if it's Apple, right? It just has to look like that. But you can go through big tech, you can go through the FANG stocks. We don't have that right now. So I used to focus so much on trading setups like this only in my favorite stocks, right? So I might sit around for a month, 2 months, waiting for the next daily squeeze in Apple. Then I quickly realized it's like, wow, there's a lot of this being this beautiful setup all over the place. if I know where to look and if I'm open-minded to stepping outside of the favorites. So here's an example of a short that we caught on Uber with the sell signals. So the setups on my bearish watch list, they're great for the downside. And like I said, I think, or I'm pretty sure here, it's looking like the short side should be our major focus at the moment. And that's kind of what the watch list dictates anyways. Here's another short we had a few weeks ago on Snapchat. And you'll keep noticing a lot of these trades are short-lived. Not by design, but just due to the environment. Right? A lot of things are setting up, but due to the volatility, we're hitting our targets that in another market might take a week to 2 weeks. A lot of times we're hitting them in 2 to 3 to 4 to 5 days here, which I'm a huge fan of. Huge fan of. But since I made that commitment to trade nothing but the setups that have the buy or the sell signals, over the course of 60 trades, I'm coming in at just about a 70-75% win rate. And what's great about this for you newer traders is out of the 56 trades, 21 of them were shorts. So if you're a newer trader, say you started trading last year or the year beforehand, you probably, due to the overall market, you probably don't have too much experience trading the downside. So it's pretty easy if you focus on the setups that are on the bearish watch list. And once you know where to go short, it's pretty straightforward. But I'll tell you guys what, and I'll make sure we get my email in the alerts here. If you would like, shoot me an email at taylor.horton@simplertrading.com, and I'll shoot you an email of the spreadsheet that tracked, all 56 of these trades. My suggestion is, shoot me an email. I'll send you the spreadsheet. Go back and study all of the trades, because what you're going to see is the theme. Every long position looked exactly the same. Every short position looked exactly the same. And keep in mind, these are all swing trades. So at a minimum, they lasted for about a day. So this has been working really well. But more importantly, here's why I think it's going to continue to work well. Keep in mind, this beautiful, twisted game of trading we play, it's a giant game of probabilities. So when you kind of force yourself to focus on setups, sectors, and trends, that fit this criteria, we're only taking trades, and I'm only going to go so much into this, but we're only taking trades and the odds are fully aligned in our favor on multiple time frames. So in terms of the buy and the sell signal, that's kind of the magic there. It's a multi-time frame thing. And that's why I'm adding them to the watch list. So again, the key here is got to know exactly what we're looking for. Right? So what does your bullish setup look like? What does your bearish setup look like? You have to know where to look. That's where the watch list plays the role. And as the kids would say, the setups on there over the last 2 months have been pretty fire. So here's an example from DBA, which I just mentioned, right? It's agriculture. Like, you've never looked at agriculture before. And not a home run trade, but a solid, 20-25% base hit. And I'm looking to stack as many of these base hits on top of each other. It is possible. So find the setup, take the entry, get your piece, and then hit the road onto the next one. And then here's a few examples in Altria. Big Mo has been great to us, and I think you guys should keep an eye on this one. It's still on the bullish watch list. There's not too much left on the bullish watch list, but Altria is still on there. But this has been great to us, I think, across a few different rooms. 4 profitable trades here over the last month. So this one, we bought the dip, and then we're taking those profits in the pop there. So we've been playing debit spreads on Mo. Solid base hits, guys. 30% return, 40-45% return. Playing nice and easy on the debit spreads. Right. So with the watch list, here's how I go about putting that together. Right, because these are things you should all be doing as well. But my job in the mastery is to make sure every single day that watch list is constantly updated with the best bullish and bearish setups. All based on those signals. So in terms of building the watch list, I do my chart work, I do my sector analysis, and then I run my scans to handpick the setups that fit the bill. Then I throw them on the watch list. I'll put a few alerts on the charts, kind of waiting for my heads up that it's time to pounce and take action. Right, but the goal is I want to know what I'm looking for in advance. I want to know exactly where I want to trade it in advance, and I don't want to focus on anything else. That's the goal. So in terms of why spend some time doing sector analysis? In terms of last year, because they had, and that's the key word there, they had the proper trend structure and momentum properties. That trend was led by big tech and the semiconductors. Admittedly, my favorites. They had all the right properties, and at the moment they don't, as we know. So there's your 2021-2020 market, and in terms of bullish trend, it was kind of a masterpiece. I mean, that's perfect. Weekly trend above the 21, stacked DMAs, every dip was basically a great buying opportunity until it ended. And here's a current weekly structure of the Qs and the semis. From my perspective, it couldn't look any more bearish. So for now, that uptrend is done. It's finished. It's gonzo. So I'm strictly short the rip on the tech and the semis until we're proven otherwise. Right. So what I do every night is, and it requires some work, but it's worth it. I look at these different sectors here in a few more pockets in the market, and then I run them for my checklists, and I'm looking for the buy signals and the sell signals. So XLK is the big tech sector. XLF, of course, is your financials. You got your semiconductors. XLB is the materials, which has recently fallen from grace. Could kind of say the same thing about XLE energy. So take a screenshot of that if you would like. But as a general statement, as far as sector analysis, those are the ones I tend to focus on. So check this out, and there's a lot of this, but based on my focus, here's an example of a sector on our bearish watch list, XLK. This just looks kind of rubbish. No stacked DMAs in the weekly chart, negatively, and this is super bearish, guys, negatively stacked DMAs on the daily chart, right? That's never good. And if y'all don't have the stacked DMAs label, that's a lifesaver. So I'll show you how you can get that. But this bearish weekly momentum, we're trading under the 21 EMA. This thing's printing sell signals like there's no tomorrow. So all day long, we're going to short bounces into the 21 EMA until that stops working. Now, here's a sector. This is kind of your last man standing that we might look to buy the dip in. It's on our bullish watch list, XLP. So for now, this is good stuff. And for now, a good representation of that big three. It's the only one on the watch list right now, and I'll show you the current watch list here in a second. But still be cautious, guys. When I pull up Thinkorswim here in a bit, I want to show you a lot of examples of what was really good looking structure that's kind of quickly rolling over and throwing in the towel here. So be a little bit cautious. But for now, that is pretty good structure. So if I like XLP, if I'm going to throw XLP onto the bullish watch list, now I'm going to take it a step further. I'm going to dive into XLP, kind of pop the hood open, look at a few of those top holdings. None of which are sexy names, but they've been trending. They've been trending beautifully. So you've got the Costco's, the Coca-Colas, the Walmarts, the Pepsis, the Procter and Gamble's, to name a few there. But because XLP was all over the bullish watch list, and for the last few weeks here, was able to nail a nice trade in Costco, which is an XLP stock. So Costco had a few bullish squeezes. We got the buy signals, and of course, it was in a good sector. So nice, 48-hour trade, good for about a 40% return. And some really important advice here, guys. So if you're going to jot anything down in your notebook, jot this down. Take the easy money and run. See how quickly Costco rolled over after our exit? We're seeing a lot of this. A lot of failed breakouts to the upside, a major lack of continuation. So get your piece and get the heck out of there. But yeah, check this out. I wanted to share this with you guys. Here's the sectors currently on our bullish watch list. XLP. That's it. Pretty sad, right? But it doesn't matter. This just means we're going to focus on the short side, right? Now, in terms of the sectors that fit our bearish watch list, it's basically the whole market here. Communications, consumer discretionary, energy, XLK, financials, materials, industrials, healthcare, transports, the home builders. At the moment, they're all fair game. To be sure that on bounces. So there's trade opportunities on the ETFs, but now imagine inside of each of those sectors, There's 2 to 4 nice setups moving with the group, setting up for a short to bounce opportunities. That's how quickly you can create a watch list, with 20, 30 plus names to take action on. And here's something else. We have no intentions of getting long, probably for a long time. The semis and the semiconductor stocks. I love AMD. I love NVIDIA. Right, a lot of good memories there. But as you can see, they're sell signals. With that being said, it's on the bearish watch list. And with that being said, until proven otherwise, we're trying to short the next big bounce here on the semis and the AMDs of the world. No biases and no favorites. Then there's the scans, guys. And I suggest you do the same thing. When I run my scans, I'm doing that with a purpose, right? Every scan that I run, daily, every night, it's focused on these specific setups. So in terms of the few different scans I run, we are working on a scan based on the signals here. But then most of my scanning is done on the simpler scanner, which is here on the website. I'm probably a little bit biased, but I like the focus scans. So what's kicking ass in this market is the bearish continuation scans from the simpler scanners. And then in addition to that, I use kind of a classic TTM squeeze scan on Thinkorswim. So that's the combo, guys. That's the combo. That combination's led to a lot of our recent trades here. So I want to show you a few things we're currently holding. Then we got a few more slides to work through, and then we'll jump into some charts, and then we'll hang out here for a little bit of Q&A. But in terms of current positions, here's a short I took on Monday in Crowd. Potentially my first time trading Crowd, not too sure. Under the 21 EMA, not a stacked EMA in sight. Histogram flipping bearish. Shorting that at 21. We're looking for a flush here into about 195-ish. So it's always the same entry, always the same exit. Another short we took yesterday is the home builders, which you guys saw there on the bearish watch list. We opened up a short on this yesterday as well. We went with a May expiration put debit spread, and we're going to target a flush here into about 55. And we've got a nice tight leash around its neck. That way we're risking less than we potentially stand to make if this thing flushes in our favor. And then real quick, I want to touch on the psychology. Huge part of the game. And it all kind of ties together. For me, when it comes to psychology, here's the thinking I try to work. If I can make the math make sense, if my losses are smaller than my wins and I'm cranking out a good win rate, everything kind of falls into place. So it's that type of thinking where each trade is just, it's a flip of the coin. It's not the end all be all. This isn't the trade that's going to make my month or, make my year. It's a drop in the bucket. With the right setups, the right strategies, that drop in the bucket, that flip of the coin, it's going to land in your favor more often than not. And as you can see, the last 60 or so trades, it's all landed in my favor pretty well here. So you want to swing as many of them as possible. If you can do that while working a good risk reward, everything takes care of itself, guys. But then in terms of patience, another quote here by Mark Minervini. I tell you, this guy's got some good quotes. But I like this one. If you don't have patience to wait for your strategy to line up, you don't have a strategy, you have an addiction. And that's some pretty deep stuff, but it's really true. A huge part of being a successful trader in any market is knowing when to be aggressive and then knowing when to take your dog for a walk. And if you're in any of the trading rooms, you hear me say that probably every day. What I mean by that is, having a proper watch list keeps you out of trouble. You know what you want to trade. You know where you want to trade it. So guess what? If nothing is lining up, congratulations, you have the day off. Take advantage of that freedom as a trader. If nothing's lining up on your watch list, you're taking the dog for a walk, right? And then another big part of being successful, again, in any market, but really this market, we got to stay dialed in. We need to keep looking at what the current market is doing. And remember, your job as a, quote unquote, stay at home retail trader. You have to follow the big money. Where they go, we go. So if they're piling into energy stocks for weeks on end, guess what we're doing? We're right there with them. If they're selling, the crap out of tech stocks, guess what we're looking to do? short the bounces. So kind of like, little magnets, we got to follow the big money. We got to follow the structure to the upside and the downside, really wherever it is. So really, we're trying to do this without any kind of strong bias, and instead just play the strategy, play the structure, play the trend that's currently being presented, that currently fits the current market conditions. So a few more slides here, guys. Then we'll jump into some charts. But in terms of a quick recap there, the market is changing. And that's a good thing because that just brings a new plate of opportunity. But last year's leaders are no longer leading. So you want to look to carve out your niche. And a big part of that is just being open-minded to, again, looking for a lot of the same setups and trades that you probably, whooped ass on in the tech stocks and the semi stocks all of last year and all of 2020. Just look to do that elsewhere. And that's where the watch list plays a really big role. So before we jump into some charts, guys, I can definitely help you out a little bit further. And I'd love to invite you guys to join the group here. And it's good timing because we're rolling out these watch lists, and alerts here in full effect. I got 60 of them under my belt. We're rocking and rolling here. So if y'all would like to work closer with me and learn how to find these kinds of setups and trade them, we got a few great packages that we're currently offering for the mastery at the moment. So we'll take a quick look, then we'll hit the charts, then we'll wrap it up with some Q&A. Then we can go watch some hoops here, some NBA playoffs. So a few different packages for the mastery you guys can pick from. There's the 30-day trial, the quarterly package, and the annual package. And you can see each package comes with a different features. So we'll jump through those here real quick. So with the 30-day trial to the mastery, you get access to the mastery group for a month. So with that, you get access to the live breakout room, the real-time trade alerts, which again, in this market, there's a lot setting up, access to the live sessions, and much more. And then additionally, guys, which I think is an awesome bonus, you're going to get my recently recorded Squeeze 101 course. So at the heart of, these signals, at the heart of everything on my watch list, it all starts at the squeeze. For me, the squeeze is the end all be all. My last 5 or 6 years of training has kind of been, in a nutshell, trying to pursue, call it excellence in trading that one setup. So if you're new to the squeeze, and even if you're not new, that's going to give you a really, really good foundation. So you get access to the Squeeze 101 course, along with 2 breakout sessions. So in the breakout sessions, business as usual. Go through the watch list. Anything on the bullish watch list, setting up at the buy zone, we'll pull the trigger. Anything on the bearish watch list, bounce into the sell zone. We'll short the stinkers. So the breakout sessions are a good opportunity for us to take some action, look for some profitable trades. And the first breakout session is on May 11th from 1 to 3 p.m. So coming up pretty soon here. And then the second session is on the 17th of May from 1 to 3 p.m. Central as well. Then you got the quarterly package. So with this, you're getting access to everything from that 30-day trial, along with 2 other breakout sessions on June 15th and the 21st from 1 to 3 p.m. And we want to make sure, guys, everything is easy to follow. So the breakout sessions, in addition to doing some, getting busy, doing some trades, they're meant to help you get up to speed. You want to make sure you got your chart settings like mine. You want to make sure you can understand the alerts, all that good stuff. So really good package there with the quarterly option. And then the Big Mac here, the best value, I think, is the annual package. So that's it's a year of access to the mastery, access to the Squeeze 101 class, a total of 4 breakout sessions. And we're going to give you complete access to my most recent class from earlier this year. So realistically, that gives you everything you need. The heart and soul of it all is the Squeeze. Squeeze 101 course has you covered. And then in my most recent class basically takes you through, A to Z, how to structure put credit spreads and how to structure, just spreads in general on these kinds of setups. So that alone is a really good value. But there, guys, is your annual package. And so with the mastery, as far as the alerts go, exactly, Mimi, exactly. All right, but as far as the alerts go here, guys, they're timely, they're easy to follow, and throughout the session, I'm going to send out alerts, with active trades, but also, just thoughts, observations throughout the session. And what I'm going to be doing here moving forward is if throughout the day, there's something to add to a bullish or a bearish watch list, we're going to add it to the list. If there's something to add to or remove from the watch list, I'm going to send out an alert and give you the heads up there as well. And with these alerts, you can have the push alerts, sent to your iPhone or your smartphone. That way, if you're on the road, you never miss any action. So all the alerts are sent out with the order, the reasoning behind the trade, the position size, along with the entry and the exit levels. That way, you know why we're trading it, where we're looking to take profits or cut it loose for the loss. And then as mentioned, guys, frequency, which I think is just what this market calls for. So my goal right now is to increase the frequency of not only alerts that I trade, but the set of opportunity that I bring you with the watch list. So with the focus on the buy signals and the sell signals, as of late, there's been a pretty constant, plate of opportunity. So we're just trying to flip that coin as much as possible. And this is great for newer members, because once you join, typically, there's going to be a new trade around the corner. And then keep in mind, you don't have to be in the room all day. So we have the alerts, and then you have the updated spreadsheet. So at the end of the day, you can jump into that and make sure you didn't miss any action. And then I try to pump out a few nightly recap videos throughout the week. That way we stay on the same page. And you can gain immediate access here to the Learning Center, review the concepts, get your chart settings going, go over a few tutorials, get a good foundation going before you hit the ground running with us. Then guys get the monthly update videos. So we cover all the trades for the month, we cover the open positions, and most importantly, getting ready for the 4 weeks of action ahead. Then you're also going to get immediate access to my recently updated bullish and bearish watch list. So, these signals, a lot of the trades we're taking, they're kind of built off the foundation of everything in these watch lists. So in terms of me wanting to see you guys be able to fish on your own, those are going to be very helpful in that pursuit. And if you're newer to trading, my goal is to make it, as simple as possible. So that's where the Learning Center is going to become really helpful. You also get access to the training room. And then, of course, you get the live sessions. That's where I can answer your questions. And, remember, guys, I'm here to help. And the training room is great because you'll get access to an additional, 3 sessions with me every week. And then you have all the other traders on the roster, in the training room as well. So that alone is a great value. And as for some of the good stuff here, the indicators, tools of the trade. So with your subscription, you're going to get access to my Thinkorswim chart link, which includes a TTM squeeze, the exponential moving averages with my exact settings, the Keltner channels with my exact settings. And I think this is awesome. The stacked DMAs label and the weekly stacked DMAs label. 2 very important tools. So we're going to hook you guys up with both of those. And then really with the watch list, it's giving you the opportunity to do is basically take these buy signals and these sell signals for a test drive. That's how we're operating. Bullish watch list on one side, bearish watch list on the other side. Anything on that bullish watch list, we're trying to buy dips to the 21 EMA because that weekly chart and that daily chart are fully aligned. Anything on the bearish watch list, we're trying to short those pops into the 21 for the very same reasons. Couple more slides here, guys. I'll show you a few charts, then we'll do some Q&A. But in terms of frequently asked questions, as far as time frame goes, I'm a swing trader at heart. And they've been a little bit shorter lived in this market, but that's just a result of the way things have been moving. So typically I'm going to focus on a weekly, 3-day or daily time frame. Just fits my lifestyle, fits my personality. As far as the active management of the trades, realistically takes a few hours per week. As far as the active management goes. And then something I think a lot of people will like about this, very scalable. So whether you're trading a smaller account or a larger account, you can scale this with 1 lot, 10 lots, and obviously more. So, I'd say accounts as small as 5 to 10 grand. What's nice about this market and opening up our horizons to, playing bullish and bearish setups and some newer names, a lot of them are a little bit cheaper. So if you got a $5,000 account, getting long or short Amazon can get a little bit hairy. Getting long or short Raytheon, agriculture, DoorDash, you can do that easily with a smaller account. So very, very scalable. And then as a mentor, guys, not something I take lightly. When I first started trading out, super fortunate, to have a lot of good mentors. One being my dad. So go figure. Lucky draw there. But my job as a mentor is, point you in the right direction. Teach you how to fish, show you where to fish, and then I think a big part of the group environment, collectively is kind of coming together when the emotions of trading come up, and just making sure we stay nice and level emotionally. So if things ever get hairy, if things are getting nasty out there, we allocate more time to jump on the mic and work through all of that together. So even being an introvert outside of the market, there's definitely something to be said for that community aspect. So if you guys are interested in joining the team, again, you got the 30-day trial, the quarterly, and then the annual. Any more questions, though, guys? You can catch me on Instagram at Focus Trades, on Twitter, property of Elon Musk there, at Focused Options, and then as always on the Focus Trades YouTube channel. So I appreciate you guys sticking around. I do want to answer some questions here, so give me just 1 minute here. I want to pull up the charts really quick. I want to show you just a few things. Things I think you should be on top of here. So let me get these charts open. All righty, let's get Thinkorswim going. All right, so a few things here, guys. And I showed you this. I showed you this in the slides, right? But we're in a market where the S&P 500 is on our bearish watch list. QQQ has sell signals. Semis, financials, the industrials, the transports. When like 90% of the market has that structure, your biggest point of opportunity is going to be on the short side. And what I mentioned earlier is, starting mainly last week, we started to see some really good bullish structure, kind of throw in the towel. So, some recent examples are U.S. Steel. Picture perfect, picture perfect, picture perfect, quickly rolls over. For a few weeks there, we had the material sector XLB all over our bullish watch list. So here's how nasty this market is. This is why you can't have any biases. You got to be quick to flip. This goes from printing a buy signal to a sell signal in 1 day. If something's going to jump from my bullish watch list to my bearish watch list overnight, just kind of tells you a little bit about the current market. Healthcare had been showing a lot of poise, and that gets pummeled. Energy, not super bearish here, but that certainly is losing a little bit of structure. So I say all of this to say, if you look at XLP here, this is the only thing as far as a sector that we still have on our bullish watch list. But I wanted to come back to this real quick because my advice is pursue anything to the upside right now with caution. Because as good as this looks, I can show you about 10, 15 setups that look just as good. We took really small profits on Aflac, but small profits was better than the shot to the chin there. So in terms of my bullish watch list, it's names like XLP, it's names like Walmart, Procter & Gamble, Coca-Cola, Pepsi. They still have that good structure, that good momentum. Just be a little bit cautious, guys. My major focus right now is on shorting bounces. So the S&Ps are fair game. The QQQ is fair game. We're picking up some home builders yesterday under the 21, negatively stacked DMAs. Try to take your shorts here and resist the temptation to shorting something, at least right now, like the S&P 500, that's down here at -3 ATR. So what I don't want y'all to do is leave the webinar tonight, and you're showing up there tomorrow all gun-ho to, short everything guns a-blazing. We want to focus on the short side, but we really want to focus on getting good short entries. Quite frankly, a lot of the market right now and a lot of the names on our bearish watch list, they're not presenting the best entries. So work your patience, guys. But I love to work that patience with you in the mastery. So I appreciate you sticking around. Before I cut you loose, jump into a few questions here, guys. So the indicators and the buy signals and the sell signals, not available yet. Still something we're working on. We got to make adjustments for lower time frames, but you guys can take them for a watch list. Take them for a watch list. You can take them for a test drive with these watch lists. Again, everything on the bullish watch list has that signal. Everything on the bearish watch list has that sell signal. So while the indicator is still being tweaked, that's how you can get early access to it. And for me, it's all I'm trading. Like, I've got to be really tempted to get long or short something that's not on one of those watch lists. What does my chart consist of? Yes, if you join the mastery, we'll give you the chart link for Thinkorswim, but we keep it pretty simple. I've got two different exponential moving averages, the 8 and the 21. Right? Those kind of gauge good entries and when things are extended. And then the purple and the yellow lines here are my Keltner channels. Right? The Keltner channels are great for helping us identify where we want to take profits. I'm always taking profits on my longs or shorts on the push into the purple Keltner channel, which is 2 ATR. Yeah, guys, so for the breakout sessions, those are just live trading sessions we're going to have together. So we'll spend an hour and a half together going through the watch list. Right? Just, again, kind of day-to-day operations of what's working in this market. We'll go through the watch list. If there's any longs to put on, we'll put on some longs. We'll put on some shorts. But then we're also going to use our time together to get you guys, settled in. Want to make sure you got the right EMAs. Want to make sure you got the Keltner channels. Want to make sure you have everything you need as far as the tools and all that structure goes. Then you can hit the ground running. So average time in a trade. Shoot me an email. Let me get you an exact number. I want to get you an exact number. 4 to 5 days, though. 4 to 5 days is the average. There's been a handful that have been 24 to 48 hours. Then there's few that have been maybe 5 to 8 days. So 4 to 5 seems to be the average right now. Is this for someone who's never traded spreads? Yeah, 100%. 100%. So here's the thing with spreads, which I used to hate. I ignored spreads for years because on the surface, folks tend to make them really complicated. They're really pretty simple. And whether it's a credit spread or a debit spread, there's a lot to be said for utilizing them in your trading. And what's working really good in this market, guys, are the debit spreads. Debit spreads are working really well. So yeah, if you're brand new to spreads, I have definitely got you covered. Another good question here. So all the work on the watch list is work that I'm doing manually. On your end, all you have to do is go into the room drive in the mastery room, and then you'll see, you'll see the spreadsheet or the document rather in the room drive. When you click on it, you'll see when it was updated last. So like right now in the room drive, we have today's update with a few more shorts on there, might I add. All right, a few more questions here, guys. And yeah, essentially, guys, we can't give you the buy signal or the sell signal yet, but I can give you basically every setup out there that has them. So the real power is in the watch list. Definitely in the watch list. Ooh, good question here. Do I think XLC will be bullish if Google has good earnings? Or if Google moves well post-earnings and if Facebook is positive per... I mean, we could talk for hours here. So hopefully I see you soon so we can. Here's what I'll give you, just based on my watch list, right? So this is all opinion aside. I can't get bullish on XLC until we're trading back above the weekly 21 EMA. That's up here at $70. So based on my criteria, this is going to be on my bearish watch list until we're back above that weekly 21 EMA. And by design, I'm going to miss a crap load of upside here. But the key is when I get around to buying XLC, I want to be really confident it's being backed up by that bullish trend, structure, and momentum. Now, what could help it, of course, to your point, would be names like Facebook, Google, trying to get something going. Maybe even Comcast can try to help out here. Great question. Yeah, guys, so in the breakout sessions, they're just live sessions. We'll get together for an hour, hour and a half. We'll do live trading, working through the watch lists. Then we open up the Q&A, right? So any questions you have, any chart requests, any trades you want to look at, we'll have a good, 60, 90 minutes together to cover it all. So, we'll start the sessions by going through the watch list, and getting busy on anything that we can take action on. Then once we kind of wrap up the active trading, I jump in and answer any questions you guys have. So in terms of futures, I do not trade futures. No experience on that end just yet. I'm afraid I would never go to bed at night. And then do I ever do scalps? No, personally, I don't. So like I mentioned, my trades have definitely been a little bit quicker in this market. But what I'm looking for typically are trades that could last anywhere from 5 days to maybe 2 to 4 weeks. Pretty big range. But I'm a swing trader through and through. How far off the 21 EMA do I feel safe entering a trade? Great question. So for the sake of conversation, let's say we're looking to get bullish. I want to take that entry as close to that 21 EMA as possible. Once it starts trading above +1 ATR, I can't help myself. I got to show you guys an example. What's been bullish here recently? I can show you the agriculture chart. Let me get rid of all the hieroglyphics here. I want to nail it as close to the 21 as possible. Once it starts trading at or above +1, which is that yellow Keltner channel here, I feel like I'm doing a little bit of chasing. Reason being is I've kind of missed half the move I'm looking to catch. So if it's pushing, above +1, if I'm looking to get short and it's pushing through -1, I tend to just kind of move on to another setup and wait for a better entry. So that's where the Keltner channels are really helpful. They keep me out of trouble. They keep me from chasing. Do I have the average win or the average loss? I do for about 35 of the trades. Shoot me an email at taylor.horton@simplertrading.com. This goes for all of you guys. Shoot me an email. I'll send you the spreadsheet that tracked each of the 56 or so trades. And then I'll give you the stats on the full 56. As far as, length of the trade, average loss, average win. So shoot me an email and I'll try to get that to you by tomorrow morning at the very earliest. But all right, guys, some good questions there. But I think we'll wrap it up here. Always a good time. Always really appreciate it. It's never easy competing with the NBA playoffs. But as always, guys, I appreciate your time. So quick recap here. The major things I want y'all to think about tonight. Really, the major way to summarize it would be, I think for a lot of you, you have experience trading the right kinds of setups. And even if you don't, it's really easy to learn that. Again, the one thing I suggest is be open-minded to looking off the beaten path. A lot of the same setups that you likely excelled with last year and in 2020, they're still out there for the taking. It's just different spots and, quite frankly, different directions. And I look forward to trading some of these with y'all in the mastery. So good stuff, guys. Enjoy the rest of your night. Be safe. And I look forward to seeing a handful of you in the rooms tomorrow morning. Talk to y'all soon.